Crypto as a whole is at a turning point. This is a decisive moment on the macro charts. Me sitting here as a crypto holder, it is getting crucial and it is getting urgent for me to figure out what I'm going to do. What I mean by this is the fact that on these charts, there is very much, in terms of historical data that we have on the Bitcoin charts, the roadmap for crypto, even for your altcoins, there is evidence that there is plenty of room for downside. But while that's happening right now, and this is what we're going to look at in this video, there is a lot of other evidence and other data suggesting that we are very much in the bottom range. The bottom is getting close, and it's altogether kind of bullish data compared to historical data and things that we saw in previous bear market cycles. So what I want to do is go through those things, but then I want to show you on the charts why we should be very careful right now, because there really is, in fact, more room to the downside. And I'm going to show you both ends of this equation and how I'm approaching these markets. Most institutional investors plan to boost crypto allocation in the next 3 years. This is something we most previously covered, and we see this right now in this bear market. Institutional investors are planning. We talk about consistently the tens of trillions of dollars getting ready to enter crypto. And right now, crypto as a whole, the market cap under $1 trillion as a whole. So that's one piece of data that we've already covered, but we start digging into what's going on right now. Bitcoin millionaire wallets drop 80% in a year of Bitcoin price bear market. So 80% less Bitcoin millionaires right now in this bear market, 80% less, a huge fall off. Many people out there might be like, that doesn't sound bullish. That sounds terrible. But oftentimes, in bullish environments and bearish environments, what you see in the headlines and the negative emotion that it kind of brings or maybe illustrates on the surface actually paints a very bullish or bearish story. In this case, a bullish story. According to the latest data from on-chain analytics from Glassnode, there are now just 23,000 wallets with a Bitcoin balance worth $1 million or more. So 23,000 wallets. Now here's the data that shows you how drastic this is. Contrast that with the scene from November 8th, 2021, around a year ago, when the tally hit its peak, Bitcoin was going all-time high. Then there were 112,898 millionaire wallets. Look at the decline. So how is that bullish? You might be like, all these Bitcoin millionaires just got like rattled, right, out of these markets, and they're struggling. How is that bullish? Check this out. There's a drop off you see in yellow. Those are the millionaire wallets just falling from all-time high. Most recently, you see this capitulation struggle in the markets. We go back to the last bear market, actually the last bull market even, January. You see that January 2018 increase in price, right? Well, guess what? You see the increase in addresses with a balance of over 1 million. And then going into the bear market, that falls. And then going into the bear market bottom, if you see here right around January 2019, that capitulating. And we're getting a very similar story now. So anytime we see any piece of data, and there are so many pieces of data, everybody, that just illustrates and reflects the consistency of these cycles, we really need to start paying attention. And this is just one piece of that data. Millionaires, Bitcoin millionaires, falling and kind of capitulating on this chart. Here's another one. Number of Bitcoin holders at all-time high as bottom draws near. So millionaires falling, but number of Bitcoin holders increasing pretty dramatically as well. If you look at this, according to on-chain analytics portal Glassnode, the number of Bitcoin holders with a position size between 0.1 and 10 has beaten its historical values, reached new highs. This is the Glassnode chart they're alluding to, and I actually pulled it up on Glassnode. Check this out. Obviously, over the years, Bitcoin addresses just been on the rise, but look most recently. Look at this. So there's Bitcoin in black, kind of there's the all-time high. Here's Bitcoin falling, and you can see a little bit kind of stagnant as the markets kind of get used to the bear market, it seems. You see in orange, those are the addresses with a balance of more than 1 Bitcoin. And then look at this. Starting in around June, when things really started to go bad and capitulate, you can see here, look at the rise. Bitcoin addresses. Even most recently, look at this parabolic rise in Bitcoin addresses. People accumulating Bitcoin. Institutions getting ready and planning on entering crypto. This is huge. This is a huge piece of data in terms of this bear market. Now, everything I'm saying right now needs to be underlined with what we're about to look at on the charts. But last thing, More than 50% of Bitcoin addresses are now in loss. Here's another negative headline. It's kind of like, that doesn't sound good. How is that bullish? Check this out. Previous bear markets ended with the majority of addresses being out of the money. On-chain data shows. Most addresses holding Bitcoin, the largest crypto, are now in the red. The first time that has happened since the start of the coronavirus-induced crash of 2020. So just look at this chart. Here we are just falling in the red. More than 50% in the red. Here's 2020. Check this out. Here's the bear market low. We're getting this repetition, this cycle repetition right now. And for me, it's making my alarms go off, right? Through this bear market, it's kind of been like, and we can pivot to the charts now. It's kind of been like, oh man, we're kind of entering a pretty bad area. Oh man, we're capitulating in the middle of this bear market. Things are getting bad. But now, and as we start digging into the charts now and bringing in technical analysis data, now we're entering bottom range. And so for me as a macro investor, I'm looking at these charts and I'm like, it's time to make some crucial decisions. And figuring out how to do that is so unique to every individual person. But here's what the charts are showing. And this is where we really need to be careful. This is where I'm being extremely careful right now. So on this Bitcoin chart, we've already identified this 786 line. It's a Fibonacci, a macro Fibonacci pullback. And by the way, I talk about Fibonacci's all the time. Fibonacci retracement levels are horizontal lines that indicate where support and resistance are likely to occur. That's it. So in a bull market, we're breaking through a Fibonacci resistance. In a bear market, we're falling back down to a Fibonacci support area, right? That's what it is. Each level is associated with a percentage. That percentage is how much of a price move the price has retracted. So retraced, I'm sorry. So 61.8 and 786 are the two that we really pay attention to. Here's the macro 786 line, Bitcoin falling all the way back to that line. We've identified over and over again Bitcoin falling below. Now there's two reasons why I think we need to be careful. Number one is illustrated on the Bitcoin chart. When Bitcoin fell below this 786 line, we kind of made a big deal of it on this channel, but it's only been 21 days since really it's happened. It's been a few weeks. Now, if we go back to previous bear markets, when Bitcoin fell below that 786 line into the bottom range, last bear market, 133 days. The bear market before that in 2015, 301 days. So we are only 21 days in to falling below this key indicator line that I've been tracking for years. So for me, that's kind of like, wow, there's bullish data that's really starting to show people accumulating Bitcoin. That's really starting to paint the picture of the bear market range that we've been in previously in previous cycles. But at the same time, there seems to be a cushion of time, potentially months, where we're going to hang out in this bottom range and potentially go lower. Now, the other thing that we want to look at in regards to this is what's going on with the economy, right? S&P 500 does a really good job of helping as a roadmap for crypto. This is highly correlated, this game that we're in right now. And you can just see, and here's Fibonacci again, and we can see how it works as resistance from that swing high to swing low. Look at that range. Look at that Fibonacci green range. It's a 618 to 786. Do you see how there was resistance there? Look at the green range from that swing high to the new swing low. Green range, 786 to 618 resistance. Boom. These are higher low resistance. And then most recently, we got another one. Swing high to swing low, 786 to 618 resistance. And that's where S&P is right now. And so on this chart, for me, we wait and we see, hey, our market's going to start showing us some type of positive momentum and we get a confirmation, a break above, or is this going to be a lower high resistance area for traditional markets? And are we going lower? In my mind, with the amount of time that's left for this recession to play out, for things to reset themselves, for markets to become healthy again, there is absolutely room for resistance at this area on S&P 500 and a 15 to 20% move to the downside for a new low. That is in play. It really is in play, I think. There's no guarantees. We always say that. I mean, the bottom could be in and this whole thing could be over. But if we're looking at realistically the situation that we're in and what phase of the situation we are in right now, there's room to the downside. And so while we have these bullish headlines, which are suggesting and indicating and reflecting previous bear market lows and where we've been before making that turnaround, while we have those things happening, it's incredibly important to watch what's going on even from a greater macro perspective outside crypto. Remember, crypto only under 100 or under $1 trillion market cap. So there are big things in play right now. So if there is more downside for traditional markets and there's more room for a length of time of trading within this bottom range, just from our own technical analysis on these Bitcoin charts, that means there could very likely be a final fall for crypto. So with just a few months left potentially in play and more downside but bullish things happening, how can we possibly navigate? How can we figure this out? And the answer is very simple. Everybody, we are all completely different. We're all in completely different financial situations. What I'm doing right here on this video, I'm just showing you what I see. I'm kind of telling you how I see things and my approach here. And my approach right now, as many of you know, because I've been tracking this, I've been waiting for the 786 and I've been waiting to fall into this range. And I kind of created these areas below the 786 line where I can kind of comfortably, in my own time, in my own way, figure out how I want to accumulate. And so that's what I'm doing. All the while, though, I'm considering one very important thing. If crypto doesn't fall into any of these ranges and I miss kind of these heavier accumulation areas, I'll miss out. And I'm very well aware of that. And that's a risk in my own view that I'm willing to take. I own crypto. It's not like I'm shorting and just waiting for a new low before I buy any crypto. I have crypto and I'll be very happy to enter a bull market, or at the very least exit this bear market and just trade sideways until the next bull market. I'd be very happy with that. But for me, I'm just tracking these markets. I'm trying to be careful. I'm trying to be patient, and I'm trying to be realistic as all of this data kind of collides with each other, because it really is a lot of bullish data colliding with some shorter term, midterm bearish data, meaning there's definitely room for downside. And so as we make our way through this bear market, we have to be very receptive and careful with all of the data that's being thrown at us. And that's kind of what I'm doing. So I think in the macro, and that's the key here, everybody. For me, when I zoom out on the charts, I'm just kind of like, the story is playing out. Take a deep breath, let it play out. Everything, in my view, in terms of crypto, is looking consistent. On the short term, even if there is more downside, even to the bottom range, I'm very zoomed out here, but you can just see, even if there's more downside to that bottom range, it's kind of like, it looks so commonplace for Bitcoin. And zooming out, in the future on this chart, if we do go lower, say we hit 12,000, zooming out, it would make so much sense in terms of crypto cycles. So I'm just trying to be patient. I'm trying to visualize every scenario and be comfortable with the present day, be comfortable with where we are right now. So everybody, let me know how you're doing out there. I appreciate you. If you're not aware, I was working on a crypto course and I put together almost 8 hours of video content. And I decided, you know what, I'm not going to sell this course. I created a Substack where I'm going to slowly be releasing some of that content for free. Go subscribe. A link will be below. And I'm kind of excited to grow that Substack and see what it turns into as far as our community can go. So I appreciate each and every one of you. I will see you all in the next video. Be careful out there. Have an awesome day. God bless.